All right, this is it. The last one in a series of 8 videos where we're going over questions to ask the sponsor. And so I'm excited to be at the end. It's been a haul, but it's all good. And the reason why I'm making this is because passive investing is mostly passive, but you need to do some work up front to make sure that a particular offering aligns with your investment goals. And again, the reason why I'm making this is because the easiest way to do that is to ask the sponsor a whole bunch of questions before you transfer your funds. We're asking questions in all sorts of areas, which include the sponsor, the property manager, the property itself, the surrounding market. We also want to know about the business plan and the projections. We want to know about the construction plan. We want to know about the loan and financing. And then finally, right now, we want to learn about the loan documents. And to help do that, I curated a list of 194 questions based on my own experience and talking to other experts. And I get it, that is a lot of questions and probably way more detail than you need. But if you are interested in seeing all of them and picking and choosing the ones that are most valuable to you, check out the link in the description to download them. And right now, we're gonna focus on that last category. We're gonna talk about the top 4 questions that you want to ask about the legal documents. And if you're anything like me, it's not the most exciting subject. If I'm being like totally honest, if we have confession time, I don't love reading through the legal stuff. That's just not fun for me. But I think it's really important that you understand some key aspects about what is happening in the legal realm. I'm James Furlo, providing strategies and tools to help real estate investors maximize their long-term cash flow while minimizing headache. Thanks for watching. Question number 1, what is the legal structure of the offering? If it's a syndication, the chances are really likely that it's simply an LLC that holds a single asset. So you don't actually buy the property directly, you buy into an LLC, which then owns the property. At least that's my guess, but you want to ask just to double check. Question number 2. Under what circumstances do the investors get a vote? This is kind of an interesting question, and as a general rule, the investors get very little to vote about outside of some really big things, like potentially, do we want to sell? Or do we want to get rid of the sponsor himself and hire a new manager for this project, which is a huge one to ask, but it really is limited to a couple things. And if you think about it, you kind of want that because you have taken a time to vet the sponsor and you trust the sponsor, and so you are letting them make the decisions. If there were a lot of voting rights, now you're putting your trust in a whole bunch of other investors who you may know nothing about. So as a general rule, you don't actually want a lot of voting rights. You want to make sure that you trust the person who you are giving the voting rights to. Question number 3. How will it be determined that the investment requires additional capital? Now, I know this isn't a question that we really like to ask because in an ideal world, you give that initial contribution and then the team goes off and they do their thing and things are great, but that doesn't always happen. And oftentimes there is a provision for the sponsor to say, you know what, instead of taking a loss and just moving on to the next project, we're going to ask for more because we think we can salvage this deal and then get the returns back. And what you want to know is what are those criteria and determining factors. And what you also want to ask about is if you don't contribute, because who knows, maybe they come at you and say, hey, we need another $50,000, which you may or may not have. What happens in that circumstance? So you just want to ask. Question number 4, what is the split above the preferred return? As a general rule, there are 2 main ways in which the profits are returned to you. The first one is really straightforward. They might say, hey, you own 70% and the sponsor owns 30%, and we just split everything 70-30. Another way to do it, which is a little bit more sophisticated and the one I actually like because it seems the most fair of all of them, is to start with a preferred return, which says the investors get all of the money up to some percentage. Usually it's like 6 to 9%, somewhere in there. And then after that preferred return is hit, then we move into what that next split is, what they call a tier 2. And that is often, again, in that 70-30, 80-20, that type of range. And that is, again, until they hit a certain percentage return. And then once that is hit, it can move into a tier 3 that might say, hey, now we're going to split things 50-50. The investors get half, the sponsor gets half, or something. And in some places, the tiers can get even more. You can have a tier 4, tier 5, It all kind of depends. And so basically, you want to ask, what is that waterfall? What is the payment structure? And what are the splits? Just so you understand what it is that you're getting into. And something to look out for is if the splits are really outside of what I just mentioned. Like, let's say just from the get-go, the split is 50-50 all the way through. That would tell you that the investor or the sponsor is either A, kind of greedy, or B, they have really optimistic assumptions. And so you really want to check those assumptions. On the flip side, they might do something where they are giving you 90 to 95% of the returns and they're just keeping the small sliver. If that's the case, there's some more questions that you're going to want to ask in there. Like, perhaps this deal really isn't that good and they're turning the dial to try to attract investors to come. In that case, you'll also want to pay particular attention to the fees, because maybe they're saying, yeah, you get paid 95% of it, but I've got a huge ongoing fee for managing this property, or something. So you just want to ask and understand what that payment structure is. So there you go. Those are the 4 questions that I would ask about the legal documents and the legal side of the investment. And I think what it will do is help you get past that initial sales pitch and really understand the mechanics behind the structure, legally speaking, of this project, and potentially help you uncover some potential issues that the sponsor has missed. Those are just a couple top ones, really important ones, but just a couple of many more questions that you could ask about an offering. And so if you would like access to my 194 questions, check out the link in the description and you can have them. And finally, if you found this video helpful, please like the video. And if you want more tools and strategies to maximize your long-term cash flow while minimizing headaches, please subscribe. Thanks for watching.